Why is banking as a service so hot right now?
Yeah, that's completely true. Every company is striving to become a fintech company.
I think the demand for instant gratification is because we live in a digital world today.
Hey, folks. Good morning, everybody. Glad to see you here. Glad to see we've got such a large crowd in. Do us a favor, if you don't mind. You can see the comments that are down there. If you have questions or is there something you'd like us to ask the folks from Bond, throw it in that comment section. Also, let us know where you're at in the world. And more importantly, you see that little share button down there. Share this thing. Let your network know that you're watching this. Let's get as many folks in here as we can. So, hey, everybody, my name's Sam Maule. Welcome to episode 7 of the 11FS Newsroom. In the weekly show, we take a deep dive into the biggest news stories of the week just gone by. Don't forget to give us a follow on LinkedIn so you never miss an episode. What you just saw was the trailer of our new documentary series about banking as a service. The first episode will be released on the 12th of November. Subscribe to our YouTube channel so you never miss an episode. Go to bit.ly/decoding BaaS to find out more. That's bit.ly/decoding BaaS to find out more. All right. So leading on from that plug, today we're going to be talking about Goldman Sachs entering banking as a service. And before we bring our guests on, I'm just going to give you a little recap of what has happened over the past week or so. Goldman released software that allows clients to embed banking services into their own products. Goldman hopes to leapfrog rivals by offering a fresh approach to corporate bank accounts and cross-border payments. After building a new cloud-based system for accounts and payments, Goldman is publicly releasing software, basically APIs, to allow clients, programmers to build on top of the bank's platform. So to talk about this, we're going to be joined by two folks who know banking as a service extremely well. We're joined by Bond's Roy Ning, co-founder and CEO, and Marcus Lobendahn. He's the VP of Strategic Partnerships. Hey, Roy, how you doing?
Hey, thanks for having us, Sam.
Thrilled to have you on. Roy, you're in San Francisco, right?
I am.
Excellent. And Marcus, pleased to have you.
Hey, Sam, good to be here.
New Zealand accent, everybody. Don't go with Australia. Obviously, New Zealand, by way of Salt Lake City. How was Salt Lake today?
Snowy. It's very snowy.
Oh, man. You know, you can't depress me any more than I possibly can be because I'm stuck in Florida and I would love to go skiing. Oh, my God, I'd love to go skiing. So, again, folks, as we jump into this, in the comments section out there, throw in questions you have. Again, let us know where you're at. And if you have questions for Roy or Marcus, feel free to jump in and add those. So let's start with Bond, and give everybody kind of an overview of who Bond is and what Bond does. And Roy, obviously, as CEO and as a co-founder, you were there from the beginning. Where did the inspiration come for the company?
Yeah, thanks, Sam. Well, the beginning wasn't too long ago. We started the company in 2019, and it came from an idea where, I've been, at the intersection of a lot of big technological changes from on-premise software to SaaS software to developer platforms. And so I had the good fortune of working for companies like Twilio and Mapbox and helping them, really gain their momentum in the marketplace through this developer type platform. And given my background in finance, the opportunity in finance, how do we combine this very unique business model around developer platform to basically enable every brand to offer financial products in an easy and compliant way? So we started the company. We raised our seed round in August of 2019. And earlier this year, we raised our Series A. So today, Bond is a 40-person company. We're a little bit distributed. A lot of us are in San Francisco. And we're building a platform that I think is unique in the marketplace. And there's been a lot of talk about banking as a service. And I do think there are a lot of platforms out there that enable this process, this partnership between a sponsored bank and brands to happen. But I think how we're building it is unique and offer a value both to the sponsor bank as well as our brand partners.
And Marcus, how long have you been with Bond?
So I joined the team fairly early on. Came on in September of last year. After being, spending some time at a sponsor bank, sort of seeing the model make a ton of sense where brands do want to partner with banks. The proposition of building technology for that specific use case was very attractive. I mean, we had more demand than we could supply at the bank. And so therefore coming over was a natural progression. So yeah, I've been here since September last year.
And correct me if I'm wrong, but you and Roy worked together at Goldman, is that correct?
Separate times, but yes.
Both ex-Goldman alumni, right?
Right.
Correct.
Okay.
Yeah, different times.
And Marcus, I'm curious. I'm not going to ask the founder this. I'm going to ask you this because obviously, Roy, you bought into the idea because hey, dude, you're one of the co-founders. How hard was that conversation, Marcus? I asked that because right before we started this show, Roy asked me how long I'd been with 11FS, and I gave the story of how I was with a large corporate. The guys came to me, and I was like, "Oh hell no, I'm not doing a startup." So Marcus, how long did it take you to go? Yeah, that's a good idea. I could do this.
Well, I mean, I don't know if it was one specific conversation to join a startup. I think the conversation was to join the right startup for myself personally.
Yeah,
so, first transitioning from Goldman to a small industrial bank, that in itself was a decision. And then to see, we launched some great brands and to see all the different types of brands, trying to figure out, where I wanted to go, with what company. And I think it wasn't until Bond came with an approach that wasn't just solving, we want to build a credit card for a specific demographic, or we want to build a debit card for a specific demographic. We want to just solve a systemic problem in this industry in order to allow a lot of great customer-focused brands to build their products. That really was the kicker for me. And then I don't think it took very long, right, Roy, from meeting outside the Canaan offices to joining the team.
A couple conversations.
Yeah, a couple coffees. You get wired, you get jacked up, and then you're ready. That's all they did for me. They loaded me up with coffee, and I was like, yes, I got to do this. And it took 6 months to convince my wife this was a good idea. By the way, that's always the hardest part. Roy, one of the things I always look at with startups and companies, and I think one of the massive keys to success is timing. I really do. I'm a firm believer that, you can have the right idea in the wrong time. But from my own personal opinion, I think banking as a service, especially as, you started the company in 2019, you talk about timing just being great. I mean, banking as a service is incredibly hot. So I've got to ask you the question, why now? Why is now the right time for this?
Yeah, I would say, there's a kind of fintech 1.0 generation where, you start with early folks like a lending club, right? Where, back in the days, banking as a service wasn't really talked about. But in order to fulfill on the mission and deliver the product, they had to partner with banks, right? And so there was this first generation of fintechs that had to build it themselves. And I think what you see is, with, increased interest in capital in fintech wanting to serve, different segments of the population, everybody is trying to partner with a bank. And, what you see is by doing it yourself, it's slow, it's costly, and oftentimes, it takes a lot of bespoke and domain experts to actually get through the hump. And a lot of early stage startups actually don't have the resources or the know-how to actually get it up and running. And, I've been a student of technology and software for a long time. And, innovation is all about, speed to experiment. And, the historical model really doesn't allow for experimentation. It's really, you don't have the money, so you can't do it, or you're big enough to actually go partner with a bank and, partner with the right processor to actually start with the experimentation. And so, we want to build a banking as a service platform that enables this innovation and experimentation. And some of them are going to be extremely successful and some of them may not, but you need a platform to actually allow for this experimentation in a compliant way.
Yeah, a great last point, by the way. Incredibly important, especially when we're talking about banking as a service. So before we start talking about Goldman, Let's kind of get a lexicon going here and make sure we're using the same terminology, especially for the audience watching this. So if you go out and Google banking as a service, you're going to get about 80 different definitions. So let's go with what Bond defines banking as a service is and what benefits it actually provides. Okay, so I'm lobbing that grenade over there. Which one of you want to take that one? How would you define banking as a service?
Marcus, you take it. I could follow.
Yeah, I'll give it a shot there. So at its simplest form, right? It's in our view, it's allowing banks and brands to really operate at what their core competencies are. And so if you think about what that means, right? A bank has all of the know-how for compliance, balance sheet, credit risk. A brand really knows about customer acquisition. And so how do you bridge those two gaps?
Our thesis is that every brand can be a fintech. And so you don't need to be a fintech per se to offer a financial service product, but even if you were a ride-sharing company, or even if you are a 1099 worker kind of platform, all those companies can offer a financial product to their end customer to further engage their experience. And so I think as a result of the market opportunity being much broader than just neobanks themselves, I think the need for platforms become more prevalent.
Yeah, that was the whole concept of platforms. I'm going to throw out a term by a friend of mine, Ron Shevlin at Cornerstone Advisors, where every year we sit here and we talk about what's going to be hot, right? And man, December's approaching, so oh my God, we all got to make our end of year predictions and all this nonsense about AI and blockchain, and you're like, yeah, oh my God, keep resurfacing the same things. But it does make me laugh. But one thing Ron has been talking about for years is the whole concept of what he calls platformification. I love that concept, right? Platforms win, ecosystems win, right? And so for me, when I look at especially what Bond does, what Goldman has said they're going to get into, what Radius Bank has made announcements about. When you talk about banking as a service, being able to do that, being part of an ecosystem and a platform is just such a huge win. So good on you guys for going down that path. I think it's a wonderful move. So let's talk a little bit about Goldman then. Again, you're both ex-alumni. So let's talk about this news that Goldman has released and is talking about. So they're offering, more or less their APIs and their software to allow companies basically to offer banking services. Do you see this as a bold move by Goldman? Are you surprised by this? I think that's probably a better question.
I'll say I'm not surprised, right? I mean, having been at Goldman for, I was there close to a decade, right? It's always been a very innovative bank. And, I think Goldman folks like to think outside the box. And I think traditionally, banking infrastructure or the IT department of banks is always looked upon as, back office to support the front office. And I think this move really signifies that Goldman's looking at their technology infrastructure almost as front end. They're going to offer that infrastructure out to other people to use. And I think it's a really strong signal that the technology component is a significant competitive advantage for the bank. And, we talked about before the show, folks like JP Morgan Chase and others are increasingly doubling down on their own proprietary technology platforms in order to drive competitive advantage in the market. And so, the logical move is that they would offer that platform out to third parties beyond kind of Goldman's internal use to, drive that adoption, right?
Yeah, and Marcus, I don't think that should really surprise people. I mean, Amazon, you look at AWS, right? You look at Microsoft with Azure, you look at Google with Google Cloud. You build out an incredibly strong tech stack, an incredibly strong suite of products. And then why wouldn't you open that up to the market? I mean, talk about a great example of why this can be so powerful. What the other thing, Marcus, that strikes me, and Roy, I'm an ex-banker. I worked at Northern Trust, the two of you at Goldman. It is always funny how people talk about how bankers don't get technology. And you just want to say, really? Have you ever actually worked at a bank at any scale? Let me take you through a little journey to see what, we're actually able to do. It might move a little bit slower because of the regulatory compliance side of the house, but it's not a bad thing, to be blunt.
I think, go ahead, Marcus.
No, I was just going to say, even when I was at Goldman 4 years ago, we were in investment management, really competing with ETFs, working with high net worth clients, convincing them, why do you pay active fees in this market when the whole thing's just moving up?
Yep.
And, the bank never just sat there on their laurels just saying, okay, well, we have the Goldman Sachs brand, so therefore customers will come. They went out and they purchased a robo-advisor platform. They went out and they purchased Clarity Money. And I think the first test of the Marcus platform was called Mosaic. And we all received invites to, do micro deposits. And part of the team was, sort of like, oh, this is a fly-by-night event. But really it was a transition in growth opportunities for Goldman, particularly with consumer banking. And really what that division is, it really is a de novo bank. And if anyone was building a de novo bank today, you wouldn't build 5,000 branches to try and catch up to JP Morgan Chase. You're going to build 5,000 APIs to, extend beyond what a physical branch location can do. And so that's why it becomes really interesting, not just for Goldman themselves, but for the entire banking as an service infrastructure space.
I also think, Sam, to your earlier point around kind of why now, why so much attention being put on banking as a service, I think whenever there's a kind of, massive shift in the market in terms of what's possible, software like solutions, it's helpful. But when you offer out building blocks, like Lego blocks of what you can build, it really kind of powers kind of like what's possible in the world, right? So if every brand indeed can be a fintech, what are the building blocks we could provide to them so that they could come up with, solutions and products that address like the end user in a unique way? You can't do that with kind of just a big piece of software. You need APIs and building blocks to actually enable. And so I think it's from my perspective, I think Goldman, as well as other banks that are kind of thinking about banking service right now, is thinking about the right way, because there is a fundamental change in what consumers feel are kind of banking's financial services providers.
There's a counter argument out there that some folks subscribe to that says, the banks are in danger of just becoming the dumb pipes, right? Becoming a utility, if you will. I mean, how would you respond to that argument?
I think banks have a lot of very critical key competencies that enable us, to have a stable financial system. I think, by offering a banking as a service product, it doesn't necessarily mean that you don't have direct relationship with customers as well. I think, a lot of sponsor banks we talk to generally are the smaller kind of Durbin exempt banks. They have their own direct business, right? It's kind of like, I have my own direct customers, I have branches, and I have digital engagement with those customers. But why not also engage indirectly with customers via a brand so that you could broaden your reach? So I don't think I think it actually expands the addressable market. It doesn't take away the addressable market.
I think I would add to that as well, right? Going back to this notion of allowing them to focus on their core competencies. I mean, no fintech can get 5x leverage on deposits.
Amen.
Right. So if you allow a bank to leverage their balance sheet, their capabilities, they then make money in the way that they know how to make money the best. Similarly, if a brand doesn't have to spend 80% of their day building infrastructure, they can flip that equation and focus on acquiring customers. But only with a platform like Bond can you really allow both sides to do that. And yes, then you move away from, okay, I'm just plugging into this bank because I can get a debit bin. You're really plugging into the bank so you can drive consumer deposits, consumer transactions, and that bank can take those deposits and do what they do best with it. I think there's a fallacy about, oh, the bank just gives me the interchange and then they sit around doing nothing because they're based in the Midwest or something, right? Like they really know what they're doing.
Yeah, I mean, there's so much more value there. It's a part of that is education, right? Is working with your customers in that case, because you and I both know There's the reality of most fintech or tech companies, or you take your pick, these solutions that are out there, they never heard of a BIN before, and when they first do, they're like, oh, you're kidding me, really? And how long is that going to take me to set up? And wait a minute, do what? They have zero desire to go in and deal with that. And then again, you throw the regulatory side of this, the compliance, the reporting side of this. There's so many other services that can be provided. And Roy, I like the point that you made. Let's take Goldman, for example. I think Goldman was founded around 1860 something. Doing that off the top of my head. They've been around a while, as has folks like Wells Fargo, JP Morgan. You take your pick for these banks. When it comes to the data security, the security component of this, they're world class. They need to be. They have to be. And so that's part of the value you're getting too. When you're going through services like that. So there's so many parts of this value add that part of this comes down to education too, and helping folks understand, the value of the services that you're actually getting. I'm going to ask you, this isn't a trick question. This is an opinion question. When we talk about fintech and we talk about solutions like this that Goldman's providing, would you lump this part of what Goldman does as a fintech brand? Can I count them as a player in the fintech space?
I think with this offering, you can.
Yeah, I think so too.
I
think it's fair, right?
Right.
Yeah. It's probably that, the Venn diagram where they show a platypus and I can't remember what the other one is, and it combines. It's probably that Venn diagram, if anything, right? Where you're blending different components of banking and tech and all that. And so there's some overlap there. Because you could easily argue that with Marcus. And what Goldman built with Marcus. And Marcus, I think you're the one, man. Your name, of course, would be Marcus.
It gets confusing.
We're just gonna go with surnames. So Lobendahn over there. But honestly, you mentioned them. The acquisition of Clarity, right? And part of the services they were able to provide that with Clarity. So even something as simple as the mobile app component of this, because when they first rolled it out, it was just, the website itself. So there's a life cycle to this. So, how far back do you think Goldman actually planned this? Do you think this was on their roadmap, when they first started down this path, that banking as a service was going to be a component of this?
I have no idea. At least when I was there a long time ago, we hadn't talked about banking as a service. But, I know in one of their analyst days, I think a year or so ago, they did talk about, the infrastructure piece being pretty critical, and banking as a service is something that, is important to them, especially around Marcus business. But I don't know when they started.
I think it's, I would think this was something, this is me personally, I have no insight to it. This is me guessing. I think going back to the early days, and I'll even say with Marcus, you could see, and this was conversations we've had here at 11FS with Bo Hartman, who's the CTO at Goldman. He even told us that, when they first sat down and they built out the technology stack, it was with the intent of how many different products can we roll out of this. It wasn't just, can we go into lending, right? Let's build this so we're not rebuilding and throwing onto this continuous. So let's be smart as you build out the tech stack. And actually, Roy, that's something you had to go through. When you start your company, is this something that we build ourselves? How much of this do we borrow, if you will, and how much do we build net new? And those are tough decisions, especially in banking. Yeah.
Firstly, I think Bond, when we started off, we're a tech company, right? We are not a bank that needed distribution. So we have a platform or exposing our own infrastructure for someone else to kind of consume. So as a tech platform, we've always been focused on, we want to be one agnostic. We don't want to be tied to one single bank. We don't want to be tied to one single processor. We want to be agnostic across the board. And so what you'll see is, as banking as a service continues to, grow from a market standpoint, there will be different models, right? There'll be models that come from banks where they kind of put their infrastructure out there and to be consumed, right? And there are a number of examples of that already in the market. And then there are folks that have built a technology platform, but they're generally kind of tied to a single bank or a single preferred processor. And what we're looking to build here is different in that we're going to be agnostic. We want to be the translation layer in some ways across the different banks and across the different processors. As you know, all of these technologies are fairly bespoke. And how do you make it simple for the brand so that when they come to a platform like Bond, you have an idea about what product you want to build. You do not need to worry about which bank you need to go after, which processor supports what capabilities. But you come to a platform where all those things are available and to the extent pre-integrated with third parties. And so I do think, the development, I think, for Goldman is one direction in terms of how banking as a service can evolve. But I think there are many different models to kind of getting to enabling these brands to offer financial products.
And Marcus, Roy is setting you up very well for the question I was going to ask you, because you're the VP of Strategic Partnerships, right? So no pressure. Your CEO might be on this call. When you look at that, the importance of partnerships for Bond and for solutions like what you have, can you talk a little bit about this? Because we did talk about ecosystem and platform and such, but those strategic partnerships are everything. I mean, they really are.
Yeah, look, I mean, I think as Roy mentioned it's about maintaining optionality, right?
Amen.
So your Chime, you've got 10 million customers, Bancorp is your bank, but you want to offer your next product. And if you can't do that with your current bank, you have to go back to square one. Yes, people now know who you are, but you still have to get a credit processor. You still have to get a credit issuing bank. So you still haven't solved for multi-product. Every brand, every fintech wants to be multi-product. Secondarily, speed to market. I mean, to build a solution that's on par with what Marqeta has is going to take you a few $100 million and a few years just to get there. Are you better off partnering with Marqeta? And then when you build this ecosystem of banks, I think there's another fallacy that if I partner with one bank, that bank will be my bank to sponsor all of my products. Banks don't operate that way. There's certain banks who want to be active in credit cards, certain banks who want to be active in installment loans. So you need to build that ecosystem to have that connectivity. So when you become big enough for multi-product, you have that optionality. And I think the last point to where Roy is talking about building blocks, right? I mean, we say this internally, like no one has ever come to us and said, I would like to build a Visa general purpose reloadable prepaid card. Right? They say, I want to provide cash in real time to my merchants. Right? Okay, who are your merchants? Oh, they're restaurants, they're small businesses, they're, kind of what you said about Cabbage. They're bakers who are baking. Yeah. And I want to give them a product that they understand. So Bond as a platform can let them focus on that custom acquisition experience. And we handle this is the commercial prepaid bin behind the scenes, all that fun stuff.
Yeah, it is kind of funny. I don't think I mentioned it to the two of you. So back in the day, I worked at TSYS, so I was on the processor side. I was on the loyalty and prepaid side for a while too. And I remember every time we had to do an integration on the loyalty platform, we had a wonderful diagram. And this is not unique to TSYS, and I'm not knocking them. But every time that you did an integration for a loyalty program, literally on the schematic, we had a black box, which was our translator, which literally meant we were building something new every freaking time. You had to. I mean, that was the world, 10 years ago. It is amazing. A company like Marqeta, a company like Bond 10 years ago, y'all wouldn't have existed, right? Mm-hmm. Which makes it fascinating now because you can't think in 10-year increments. You can't even think in 5-year increments anymore, right? The shelf life of products, thanks to technology, thanks to a changing ecosystem, if you will, that's you're looking way too far out. So I'll be curious y'all's input on this. So Goldman obviously has made this move, and I know the day they made the announcement, my email and phone pretty much blew up from a couple different people. I do think it was funny. I think it was a day or two later that Radius Bank said, "Oh, hey guys, guess what? We've improved our banking as a service offering," which, by the way, it's London Club, right? That owns Radius Bank, if I remember right. So interesting. So, you got Radius Bank, you've got Goldman sitting out there. Do you think other banks will look to make this move and get out there and offer this as a service?
I would say a couple of things. One is the banks that we typically speak with, the 10 billion and below Durbin exempt banks, for the most part, they're fairly limited in terms of their own technology resources. And I mean, they buy a lot of software, but they don't necessarily build a lot of software themselves.
Right.
And one thing that uniquely kind of enables banks to get on the Bond platform is that we also build software for them, such that they can easily offer their product to brands. And for those that are in the fortunate position to have teams of developers to build a platform like a Radius or a Marcus Goldman, that is a great opportunity for them to go direct and engage with brands. But I think for a lot of these smaller banks, at least the typical or the traditional players in the sponsor bank space, they typically don't have that luxury. And so what we're building here at Bond is, there's a product within our platform called Bond OS, which enables these sponsor banks to not only onboard these new brands in a much more compliant and streamlined way, but also manage these programs going forward with the data visibility they need so that they can actually scale out more programs without adding people on the other end to actually support these programs. And so, I do think more banks will do this, and because there is definitely a big addressable market out there from a brand standpoint and also from the consumer standpoint. They want choice. But I think without a piece of software that also enables the sponsor banks is actually fairly hard to do.
That's one of the recommendations I make a ton, because we talk a lot to those banks that fit, like you said, in that frame, right? At 10 billion and under when it comes to assets. That probably one of the most important decisions they need to make on the technology side is how they allocate their resources, right? Don't try to do everything. Don't try to be everything. But if you want to differentiate, find out how you can do that. And that's where you're going to get, what's unique to you and what's unique to your DNA as a bank, for your customers, and allocate your resources incredibly smart when you're doing that. And so being able to provide tools like that, I love, that you call it Bond OS, because it's really easy to articulate exactly what that is. To me, that's just a smart and a brilliant way to move forward. It gets back to, let bakers bake, the same with smaller banks, bank and have those relationships with the customers where it has the most value, the most meaning.
And by the way, the banking cores that these banks all have bought and implemented, right? That was bought and implemented for direct customers.
Exactly.
And so as a result, you saw the first generation of these sponsor banks really doing a lot of the partnership pieces manually, more or less. And, it's even if they have a desire to continue to do so, it's very hard to scale in a profitable way toward that direction. And so that's also one reason why we believe Bond is uniquely positioned in the market.
Yeah, and I would agree wholeheartedly. And folks, believe it or not, we're up against the clock, so we're going to have to wrap up. Roy, Marcus, thanks for joining us. Obviously, we're going to have folks who are going to be curious about Bond and want to learn more, both as a customer and, hey, Marcus, in a strategic partnership. So with that said, what's the best way for folks to be able to reach out to you, contact you, and also learn more about Bond?
Yeah, hello at bond.tech, or I'm at Roy at bond.tech, Marcus is at marcus@bond.tech. We look forward to hearing from
All right,
folks.
that's the easy as it comes, folks. All right, that's all we have for this week, but don't miss our other live show, Spotlight, which goes out live on Thursday at 3:30 p.m. GMT. That's, I think, 10:30 a.m. on the East Coast here in the U.S. This week, we'll be joined by 3 mission leaders from nationwide. Make sure you give us a follow on LinkedIn so you never miss an episode. And have a great week, everybody. Thanks for joining.
Cheers.